So some statistics that I wanted to share with you that I think are just, well, let me just read to you what is underlined here. This was recently, as in just a couple of days ago, from Susan Coffey at the AICPA. She said more than 1/3 of the audits that that was the regulators, the DOL, more than 1/3 of the audits looked at had quality issues. Now, you folks are all in business. If you had a 1/3 failure rate on your product, what would that do to your business? It would not be good. So when I talk about hiring somebody that's qualified, hiring somebody that's charging the right number, hiring somebody that's getting paid for the level of service that they're doing, when it comes to plan audits, specifically, this is saying that regulators have gone out, they've looked at the work that accounting firms have done, and they believe that 1/3 of the files they've looked at are deficient in some way. I think that's pretty shocking. And why is that important to you? Well, check this out. So the regulators, the Department of Labor, that look at auditing firms and the work that they've done that and they've issued reports. However, their regulatory authority is not over the accounting profession, it's over plan sponsors. So if they're finding a deficient audit, depending on the degree or whatnot, they're coming back to you and saying, you attached an audit to your 5500 that was deficient, and now you're going to get to fix it. And that can be time-consuming, expensive, etc. So I think there are some things that you need to maybe look at a little bit closer when selecting an auditor. I will go ahead and say that, yes, I am biased. Okay, so we'll just get that out there. But some things that you might want to consider when you're hiring an auditor for your plan. Hire someone that's a specialist, that has some specialized expertise. These plan audits they're just unique. Let's just put it that way. There's this whole concept of materiality that auditors use that works great when you're doing a company financial statement, etc. But when you're working with an employee's retirement account that's missing $75, it's missing $75. If that was your $75, you'd want to make sure it was there. So there's a whole different view, a whole different mindset for an auditor of a qualified plan than someone that's maybe doing a financial statement audit for a company. And you probably need some specialized expertise to be able to identify that and deal with it. And we oftentimes enlist the help of an ERISA attorney. I would also say you want your plan auditor to find the problems that are there. You have options when I find it. You don't have as many options when a regulator finds it. They're going to advise you on how to fix it. I'm going to tell you what your options are and how to fix it. We're going to involve ERISA counsel, and we're going to do some things. You'll have more leeway with any sort of corrective activity. So on through the list, I would suggest you look at someone that belongs to the AICPA's Quality Center for Employee Benefit Plans. It's a response that the AICPA has had to the quality issues surrounding plans. Auditors that belong to the center are required to have additional CPE, continuing education in plans. They're required to have more of their audit files available for peer review, etc. So there are some guardrails in place for that. So I would look for somebody that belongs to that center. Someone that knows qualified plans, perhaps has certain industry designations. ASPA, for example, has I'll just call it an accreditation sort of program where you can go through a certain series of programs and get certified, I'll just call it, through ASPA. And it's specifically geared toward knowing and understanding ERISA. And then also an ability to deliver in a timely manner. I cannot tell you, when I look at plans issued by firms, it seems they're all dated somewhere between October 1st and October 15th. And if you've been in that spot, you know it's probably not a very fun place to be. There's a lot of other things going on, and I ultimately believe it impacts negatively audit quality. So I would build and design and press for a June field work and a July delivery of a product. What that allows for is, I mentioned earlier these plans are tax qualified. If problems are found, they must be corrected in order for that plan to retain its tax qualified status. So If a problem is found in July, you have time to fix it. If that same problem is found in September, and now you're up against the rush of October 15th, it may or may not get fixed. And if you miss that filing deadline without an audit attached to your Form 5500, there are substantial potential penalties, up to $1,100 a day for the plan that's filed without an audit attached. Rarely does that level of penalty get assessed, but that is what you're up against. So with that, I'm going to turn it back to Brandon, and hope you enjoy the rest of your day.